We're at the end of an empire right now. It is the end. It's the end of this. And the trouble when this comes to an end, war follows. That's what I'm afraid of. Really, I'm afraid for the average punter out there, you know. So we're in serious trouble because with the end of the American empire, is China going to take over? I don't know.
We are witnessing the gradual collapse of a financial system once believed to be stable. The dollar's credibility is deteriorating under the strain of record debt, persistent inflation, and years of short-sighted policies. Central banks now face an impossible dilemma: tighten too much and risk economic collapse, ease too soon and let inflation spiral out of control. As a result, trust in traditional institutions is rapidly fading. Best-selling author and financial educator Robert Kiyosaki views this era as the decline of American economic dominance. He warns that what lies ahead won't be a smooth reset but a prolonged period of volatility and structural change. In this uncertain landscape, Bitcoin is emerging as a financial shield, a crucial line of defense as confidence in the old system erodes and capital shifts toward assets that cannot be printed, frozen, or devalued by inflation. Stay tuned until the end of the video, where we share key insights from Robert Kiyosaki and Lynn Alden on what they foresee for the global economy and how investors can protect themselves moving forward.
This was 1964. That used to be real silver. Now it's fake silver. So then 1971, this was backed by gold and silver. And then Nixon took it off. This became debt. That's one of the most important things, because now it became debt. For me to get rich, I had to use debt. But what do our schools teach us? Stay out of debt. That's how stupid school teachers are. Debt makes guys like you and me rich. And ironically, because we use debt, we don't pay any taxes. You know, taxes are very high here in London, very high in America. But real estate guys like Trump and I, we don't pay taxes legally. Now that makes a lot of the liberal or the conservatives or the, whatever you call them, the greenies and the academic types, angry. Hillary Clinton, she was running against Trump. She says, and you don't even pay taxes. And what does Trump say to her? He means I'm smart. This is toilet paper. And that's why people are in trouble today, because America is about to crash, as you know. We're in serious trouble. The first thing that Biden did when he came to office, I'm an oil guy, I went to school for oil. I drove tankers with Standard Oil. First thing that Biden did was he cut the Keystone pipeline. The pipeline ran from Canada all the way to the Gulf of Mexico. When he cut that pipeline, that was Biden did. Trump loved it. But when Biden cut it, I still sell oil. I'm an oil guy. So I have real estate, oil, all this other stuff. I was selling oil for $30 a barrel when Trump was in office.
Cyber criminals are getting smarter, and everyday investors are the new target. You worked hard for your crypto. Don't lose it to a scam. Recently, attackers bribed offshore agents at major crypto platforms, stealing names, birth dates, even social security numbers. They drained real accounts in seconds. No blockchain hack, just human error. Once it's gone in crypto, it's gone. That's why ITrust Capital created the Premium Custody Account, the most secure way to protect your asset. It's a closed-loop system, meaning funds can only move between you and your account. Even if someone gained access, they can't steal your crypto. Backed by institutional-grade custody at no extra cost. Sleep easy knowing your investments are locked down. Click the link, use code DOSE7, and get a $100 funding bonus. Start protecting your future with ITrust Capital.
When Biden came to office, oil went to $130 a barrel. That sent inflation through the roof. It wiped out mom and dad. Today, the spooky thing about the world economy is the gap between rich and poor getting wider, because people are working for this. Sad, isn't it?
And where does Bitcoin fit in all this?
I own Bitcoin. I was fortunate enough because I took, technical trading is watching market trends. So I studied for 3 years technical trading. I'm not very good at it. I'm a real estate guy, real slow. And so I was watching Bitcoin. It went from nothing to 20,000. I went, wow. Then it retraced back to nothing. And then started coming up, and it picked up momentum. So I bought 60 Bitcoin at 6,000.
Do you think it might become a relevant currency?
We'll see. Bitcoin, is the blockchain technology. Blockchain makes it valuable because it got integrity.
What if the governments create central digital currencies? What are your thoughts on those?
I don't know. What I understand, I could be wrong. Our freedom's gone. They can track you by this. Like right now, if I use my credit card, right? They know where I used it. So if you go to CBDC, central bank digital currency.
I mean, that's tracking on another level, isn't it?
That's right. And that's what I'm saying. This is the end of the American empire, but we don't know what the next one is. My question is, I don't care what they're doing. I want to know what you're doing,
Robert Kiyosaki is once again sounding the alarm for investors to get prepared. He recommends shifting into gold, silver, and Bitcoin as safeguards against what he calls the largest debt bubble in history. In a recent tweet, the Rich Dad Poor Dad author warned that a global monetary collapse seems imminent. Those still relying on fiat currencies and bonds could face significant financial losses. Kiyosaki points to clear signs of rising stress in the global financial system as the reason for the bubble. Debt levels are at record highs, inflation continues to squeeze households, and central banks are struggling to maintain stability without losing credibility. The long-held trust in bonds and fiat money is fading. As confidence erodes and financial conditions tighten, capital is shifting toward assets viewed as safer amid long-term uncertainty. Next, let's hear from macro analyst Lynn Alden as she explains why the system can't handle deleveraging, how public debt is fueling the economy, and what this means for anyone looking to protect their wealth in the years ahead.
One thing I covered in that presentation is that we've crossed over 100 trillion debt, which includes public and private debt. So that's kind of total debt in the American system. It's obviously higher than that when you look at globally. One of the things I pointed out too is that the number of years that they've ever gone down is extremely low. So in the entire kind of period that we've been alive, and even our parents have probably been alive, the total debt in the U.S. only fell one time, and that was 2008 during the global financial crisis, and it only fell by 1% before they started money printing. And if I get the longer data set, going back all the way to the creation of the Federal Reserve over 110 years ago, there were 4 other years where total debt went down, and they were all in the Great Depression. So 1930 to 1934, and then that got too painful for them, so they printed. And so 5 years out of the over a century where they ever let that debt fall, because the way it's currently structured, central banking with fractional reserve banking built on top of it, and then debt securities built on top of that, it kind of has to keep increasing, or it runs into issues because it's so incredibly levered. When it gets levered 20 to 1 or 50 to 1, as it normally is, 50 to 1 being at those kind of peak periods, they don't really have any ability to ever let that even unwind a tiny bit, because even a small unwind is like bigger than the monetary base. And so they're pretty quick to pull the money printing trigger. As for how bad it's going to get, so we're already past kind of the private sector deleveraging peak. So the 2 times in American history where that happened were 1, the Great Depression, so early 1930s, and 2, the Great Recession, the global financial crisis of 2008, 2009, and the few years after that. And now we're more in the public debt cycle, which is that more debt is transferred to the federal level. Basically, I view it as more of a long grind than an event. So, for example, I'm not really calling for a crisis in the next handful of years. I mean, who knows what can happen with war or geopolitics, but aside, not putting that stuff aside, in terms of just the U.S. money system, I'm not really looking for crisis. It's more like positions that are currently disadvantaged are going to continue to be, and ones that are currently advantaged are going to continue to be. And so basically, if you're on the right side of those deficits, it generally feels pretty good, and people wonder why are people complaining? What's the issue? And if you're not on the right side of those deficits, you're getting squeezed pretty hard because you're getting all the debasement associated with those deficits, but you're not on the receiving side. So you're getting diluted. There's kind of this value being transferred away from those people and toward others in a fairly opaque way. So how bad it's going to get depends on how either fortunate or unfortunate you are in the stack, and then also what you're doing, be aware of it, and then protect yourself from it.
And what do you think could happen or will happen if the US as a nation is going to lose their reserve status?
Well, I think that's more of a process than an event. If you kind of point to when did the UK lose their reserve currency status, there's a couple milestones that were important, but none of them were like the day. And so there was a period of time where the U.S. surpassed, the biggest economy in the world. Then Bretton Woods moment was obviously a huge moment, but the UK debt was still pretty widely held. Then there was the Suez crisis, where the UK lost political clout, and then it's really been a long grind of losing it ever since. There's still a reserve currency, they're still in the top 5 of like held currencies, but not very much. And they've never had this kind of massive crisis because of it, but they've had a deterioration in their global standing and kind of the aftershocks of that. So I think that the U.S., by some metrics, we already hit peak U.S. dominance, which is you can look at, say, U.S. dollar share of global reserve assets. You can look at U.S. share of global GDP. There's a couple of different metrics you can look at. Whether or not the U.S. is the biggest trading partner with most countries in the world or not, we've lost that to China. And so I do think we are over our hump, we're over our peak. But I think there's this kind of like long tail that goes forward. In addition, people, when they think that, often assume that another currency has to replace the former currency. But historically, that really only happened like one time. For most of history, kind of modern history as we know it, gold was really the global reserve currency, and the other currencies were just these like overlays on top of that. They were instruments that were generally backed by gold or backed by silver in some cases, and it was whatever the kind of the country that was exploring the most, that was kind of this biggest growing economy, and therefore the most recognizable. And as they would kind of expand and then contract, and some other entity would take over, that would kind of displace them. But ultimately, it was gold for gold and silver for most of that history. We did have a handover where the UK went to the US as a global reserve currency, but people often assume that the US has to hand it over to someone else, like China or whatever the case may be. I make the argument that this period was an anomaly. This isn't something that's going to keep repeating. This kind of US dominance period was an anomaly. So after World War II, the US was over 40% of GDP. Most of the world was destroyed. The US had by far the most gold, biggest manufacturing base, really strong demographics, by far the biggest military. The homeland was mostly unscathed by the entire war. And so it was just like a hyperpower position. And so everything was kind of built on top of that. And over time, we've fallen from over 40% of GDP to 15 to 25%, depending on whether you're looking at nominal or purchasing power parity GDP. We're no longer the biggest trading partner. And so as you kind of go by different metrics, we've been shrinking. But there's really no other currency block that's going to recreate that 40% of GDP hyper dominant situation. And if anything, that's a healthy thing. That was an anomalous period where like most of the rest of the world was destroyed. And if you look at kind of long run history, like China and India used to be pretty big percentages of global GDP, stretching back a very long time. But in the era of kind of Western exploration and colonialism and stuff, they were on the wrong side of the technology war that happened. So they radically shrank as a percentage of global GDP despite their large populations. And if anything, the recent return of India and China to rather large chunks of global GDP is back to the normal state of affairs, given the size of their population and the long-standing history of their cultures. So I think we're entering a more multipolar world is kind of the punchline after that long ramble I just gave. We're entering a more multipolar world, which generally means two things. One, neutral reserve assets reassert themselves in the system. So the biggest one would be gold, but obviously Bitcoin's a newcomer with a lot of really attractive characteristics. And it also means, to the extent that fiat currencies are held as reserve assets, there could be more diffused holding of them. So rather than one being, say, 70% and like the next four making up the other 30%, you might have the top one be 40% or 50%, and the other four make up, the rest of that, or the other 9 top ones make up the rest of that. So you have a more diffused currency base.
As Bitcoin continues to mature, a clear shift is emerging in how different types of capital approach it. While retail investors and asset managers remain active, sovereign wealth funds are now viewing Bitcoin with a long-term perspective. Their focus is on preserving value across generations rather than chasing short-term gains. In this context, volatility matters less when decisions are made with decades in mind. What truly counts is whether an asset can stay relevant, grow steadily, and offer stability in an increasingly uncertain system. With its fixed supply and expanding infrastructure, Bitcoin is beginning to meet that profile. No longer dismissed as a fringe asset, it is now being evaluated with the same seriousness as any long-duration holding. creditor nations with stable currencies and long-term investment horizons are starting to take deliberate positions in Bitcoin. These moves are driven not by speculation, but by a strategic need to preserve value over extended periods. For funds thinking in decades rather than quarters, volatility becomes less a risk and more a calculated trade-off. As trust in traditional financial systems wanes, Bitcoin is gaining recognition as a credible instrument for long-term capital preservation. If this trend persists, it could establish a new benchmark for protecting wealth across generations. The transition will be gradual, but its impact could endure for years to come. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.